This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, March 10th, 2016. Euro dollar. So right now the key levels to watch above and below in the euro are 110.69 above. That's the high that we saw back on the 26th of February, and 108.26 below. That's the low that was seen on the 2nd of March. At this point, a break above or below is required for clearer directional insight. Given the recent breakdown that we've seen from 1377 back below 110, and given the broader downtrend, the focus and the bias is shifted to the downside, with an expectation more for a break below 108.26, which would expose 107.11, the 2016 low, further down, below which exposes the critical December base at 105.21. At the same time, though, the market could still break back above 110.69, a recent recovery high, and if we do see a break back above 110.69, this could put the pressure back on the top side. So again, 110.69 and 108.26 are the key levels right now to watch above and below. Sterling dollar. So cable remains confined to a broader downtrend, and so this latest rally is seen as corrective, with the market looking for the next lower top ahead of a bearish resumption. At this point, it is possible that we have now seen a fresh lower top by that recent high at 142.84, though ideally the market should remain very well capped if we do see another rally below the 144 area in favor of that next downside extension. Look for a break and close back below recent support at 140.134 to strengthen the bearish outlook and accelerate declines back towards the recent near 7-year low at 138.36, below which exposes a measured move downside objective at 135, which also coincides with that multi-year base from 2009. At this point, only back above 144 would really take the immediate pressure off the downside. Dollar yen. So dollar yen has been locked within a consolidation over the past several days, and given the downtrend in this market over the past several weeks, the consolidation is classified as a bearish consolidation, which could see a fresh drop below the recent 2016 multi-month base at 110.98. A break below that level would open the door for the next major downside extension in this market towards the 107 to 108 area. At the same time, if the market breaks back above some previous support turn resistance in the 116 area, this would take the immediate pressure off the downside and suggest we could be seeing some form of a base. Euro Swiss. So Euro Swiss continues to be overall very well supported on dips down towards the 107 area, and the market retains its recovery outlook and is expected to trade higher back towards the multi-month peak at 112, above which exposes the 115 area further up. As such, if we do see any setbacks, they should continue to be well supported below ahead of that multi-week range low at 107.15, with only a break back below 107.15 to really compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is stalled out into some critical medium-term resistance. If we look back by that high that we had seen all the way back in July of 2015, July 6th of 2015 at 75.29, you can see that this latest rally is once again stalled out just shy of that level at 75.28 on Wednesday. At this point, the market would need to establish above the 75.30 area to open the door for fresh upside, while inability to do so suggests that the market could be poised for a more immediate bearish resumption back down towards eventually that recent multi-year low at 68.27. Right now, the key level to watch below comes in by yesterday's low, which is at 74.12. A break and close below there will strengthen the prospect for a bearish resumption. Again, back above 75.30 would be required to shift the outlook to the constructive side. Dollar CAD. So dollar CAD has seen a major pullback since reaching near 13-year highs in January at 146.90. But overall, the longer-term trend is still favoring the upside, and as such, this latest pullback into the 78.6 fib retracement of the October 2015 low to January 2016 high should offer a formidable support zone ahead of a bullish resumption. Look for a break and close back above recent highs at 134.47 to strengthen this outlook and accelerate gains. Kiwi dollar. So Kiwi continues to be very well capped on rallies, with medium-term resistance at 69 offering itself as formidable resistance. The market is once again stalled out ahead of 69 and is now looking to the downside. A break back below recent support at 65.46 will strengthen the bearish outlook and accelerate declines back down towards next critical support at 63.47 further down. SPX 500. So the S&P 500 has seen a really nice rally over the past several weeks, though at this point the rally is viewed as corrective and the market is expected to stall out somewhere in this range up here between 2000 and 2025 in favor of that next medium-term lower top and a resumption of declines back down towards the recent multi-month low at 1808. A break below there would then expose a next downside extension towards a measured move in the 1600 area. At this point, only a close back above 2025 would really compromise this bearish outlook, this newly adopted bearish outlook for the S&P 500. Gold. So although we've seen a bit of a setback this week in gold, the market retains its highly constructive outlook now that it's broken back above 1200. At this point, dips are expected to be well supported down towards 1200, with ultimately the market supported for a higher low in favor of the next upside extension towards that 2015 peak from January at 1307. At this point, only back below some previous resistance at 1192 would compromise this outlook and put the pressure back on the downside.